What is going on, everyone? We've got Chris from Spot On Analysis here. Of course, I don't need no introduction because you're on my channel watching Top Ticker Trades. Today, we're going to do things a little bit differently because we're going to be talking about, well, we're going to be talking about that Russian and Ukraine war. What in the hell is exactly going on? How in the heck is that going to affect your portfolio? And what better way for us to do all this and to bring Chris from Spot On Analysis on here to tell you exactly what in the hell's going on and how it's going to affect your portfolio.
I don't know about exactly, but we'll give it a shot.
We'll give it a shot, right?
It's so many moving parts.
So, Chris, kind of give them a brief narrative of when the heck is going on and what they can expect. And I don't mean to ask you too much, but all the stuff that's going on with the Fed right now. I mean, tell us what's going on, Chris.
A conversation I had on Facebook with a guy, and he wants to know, can anybody explain to me why NIO is down a third of what it's worth when all the price targets are high? And I kind of commented, and at the end we had this big long conversation, and he thought I was picking with him. And I says, no, I don't play. We're talking serious money. We're talking serious losses. I mean, this guy was on the verge of, I thought maybe he was suicidal. He kept saying his life is effed. And I'm like, hey, hang in there. Everybody is down. Right. This is what's going on. And that's one of the things when I cover, you know, yeah, I have a nerdy channel. Yes, not a lot of people into that kind of thing. But if you ever go through one stock, and I've done 7, if you go through one stock front to back, from the introduction to the price target, you'll understand exactly what's going on in the world. I show you how this stock, we develop a price, but I show you everything it's sensitive to. We go through all the economics of it. We go through the competition. We go through the products, the strategy. We do the whole complete analysis. But if you don't understand that or how you even get to a price target, you won't even understand how your price target moves up and down. So according to, you know, just looking at some macroeconomic items, you have inflation with COVID. The U.S. economy had trillions of dollars pumped into it. No one was working. So you're going to have an inflationary environment, you know, because of that. That is a no-brainer. The Fed is kind of slow in getting that under control. That is their job. It's unemployment and inflation. And they kind of let Jerome Powell, let that get out a little bit. They're going to go ahead and raise that interest rate. What that's going to do is cool the economy off and put pressure on your growth stocks. This is one of the hardest hit sectors on the, you know, on the stock market, as you guys know. Penny stocks, growth stocks, stocks that are not profitable. Right. And I try to explain to them, I said, well, anytime you invest in a company with negative cash flows, NIO, FUBO, NVIS, you name it, the fact that they have a positive share price means that all of the value that that company is worth is derived from future cash flows. And we deal with Nano Dimension, who I'm in the middle of doing analysis on it, you know, as we speak. So, well, they have more money on the balance sheet than what the stock is worth. They should be trading at, you know, at least that. Yes, if they were not a growing company, but this is a growth company, they're not going to give you a dividend. They tell you in the analysis, and we're covering this right now. We're like halfway through it. So if you ever want to see this done in real life,
that's
you know,
channel
you can go over there and watch it. They're not giving this to the shareholders, so we don't add that in. You know, it's one thing about management. When they tell you something, believe it. So we look at that. Then we look at inflation. Yes, it's going to put pressure on it, but also look at what your company is sensitive to. I did WD-40 back in grad school. They were very sensitive to oil and metals. Everyone knows they go in cans, some plastic containers, but for the most part, metal. You have to be aware that as commodity prices rise, your inputs are going to rise. When your inputs rise, cost of goods rise, revenues go down, net income goes down, even everything comes down, the bottom line, and the share price goes down. So in this inflationary environment, you have to be able to pass on, you know, the increased cost to the customer. Well, who gets to do that? You only get to do that if you have the right strategy, if you have a differentiation strategy. That's why we go through the competitive landscape and strategy, because that determines who gets to raise their prices and protect their share prices. Now, if you're in a low-cost situation and it's a race to the bottom, yeah, the share price, you know, everybody is going to go to the floor and you're going to have a low share price. So all of this stuff, it seems boring, but trust me, every one of them is critical to understanding the economics and what's going on with the stock price. I remember stories in grad school. We used to pick on all the economists and the accounting students, and of course we had the marketing, the finance guys, and management, computer information system, and we used to pick on them and say, oh, you guys, you're the only people never going to have a job. All economists work for the government or universities. And Dr. Terry, the finance guy, well, you leave the economists alone, because if you don't know economics, you can't get a degree in finance, because it all starts with the economists. They have to make the projections. So that is where we start our analysis with, how much money are we even fighting for? Is this thing even worth, fighting for? It's like going 100 miles to pick up $10. Like, let them have it. It costs too much. It's not even worth it. So when you start to understand the macroeconomic analysis, what your company is, you can understand what affects it, and you can look in that storm. Actually, you can average down and know that, hey, this is, systematic or, unsystematic or idiosyncratic, risk or whatever. We get as fancy as you like, but at the end of the day, people are saying, why did it come down? This is just crazy. No, it's actually normal and it's expected. And you see real analysts not panicking. They're eyeing this storm down. They're even averaging down and getting better share prices as a result.
I'm just going to go ahead and hate on Gary Gensler because everybody else is doing it. Why shouldn't I? Gary Gensler came out just a few days ago and said that by 2024, most Chinese companies could be delisted. Now, Chris, we both have NIO in our portfolios. Should I sell all of my NIO stock?
Well, I have been not adding to NIO, not because of what's going on. I really like the company. It's geopolitical. Everybody thinks Taiwan's next. If that is the case, I don't want to be caught holding any Chinese companies. So as long as China still has its eye on Taiwan, as long as they're still supporting Vladimir Putin, I feel uncomfortable holding any stocks, because when it hits the fan, they're out of here and we're at a loss. So I want to feel a little bit better. It's not NIO. I think NIO is great. I think they have promise. I think they could be doing better. But at the right now, it's not them. It's their government that's making me have pause. And we'll just see, because we've yet to see the killing and bloodshed in Ukraine. We've yet to see China come out and condemn it. So yeah, I'm very uncomfortable holding NIO, but it's not because of NIO.
So how much lower can it actually go, Chris? I mean, it's at 18 something right now.
Every stock can go to zero.
But what about NIO? Could it go to zero?
Will it go to zero or will it not? It is a function of financial behavior. And that's up to us, the investors. If people, continue to lose hope and continue to have doubt and sell their position, the stock will go down. But you got to understand, you just create an opportunity for someone else to come in that believe in it. I personally believe in NIO. Again, it's my issue is with the government and what their intentions on it. Because if you can, as a nation, sit back and see what Russia is doing in this country,
right, and
not condemn it, it's like you watching an elderly woman get beat up by a group of teenagers. If you can watch that and not have pause, I have an issue with your mindset.
Right. Yeah,
and that's my issue with NIO and any other Alibaba, whoever. Yes, the Chinese companies. And once what we see happen with Russia and the ruble, we can see happen with China and their currency as well, should they go out to Taiwan. So I don't want to be left holding the bag. I don't have a lot of money to take a loss like that, and I want to be able to invest. And that's one of the things we even cover when I covered NIO. You can go back and look. NIO's first company I ever covered, I had paused in. This was a year ago, but even before Russia did what they did. I says, hey, I'm worried about the geopolitical landscape in China.
All right, one last question, Chris. I promise you'll do the last one. Charles Munger, does that name mean anything to you?
Charles Munger, yes.
Is he related to Warren Buffett in any way?
I don't think they're related. They've been partners for 70 years or so. He's actually the brain number cruncher guy. I mean, okay. Buffett's a little laid back, off the cuff, but Munger is kind of the bookworm.
Now, Chris, I don't know if Alibaba has been in your portfolio or not, but they finally they broke down and went under $100. They're about at $98 and something cents right now. I've been waiting for this for a very long time. And while they were still over $100, I think this was about a couple of days ago, I found out that Charles Munger doubled down on his position on Alibaba. How do you feel about that?
Well, one thing I do know about Munger is he does his homework. And if he feels like it's a good buy, then, obviously he's put something together that'll lead him in that direction. Again, he has the money to lose and exposure, over there. He can take that chance. I have a certain allocation of resources, far less than Munger's allocation of resources. And I can't take a hit like that. If you can take it and absorb it, it may be a good opportunity. But Munger definitely knows what he's talking about. He's forgotten more about the stock market than I may ever know.
Yeah, me and you
but
both.
Again, this guy has money to take those risks. And with that leverage, with that strength, you can be out there and take more risk. I'm in Amazon. I'd rather stay stateside until, if I become a billionaire like Munger, hey, I'll go and buy some Alibaba and double down as well.
Right. And I may still do it behind your back now, too.
But you look at his equivalent position.
Oh, yeah.
Maybe 1/1000th of his portfolio.
Yeah.
And you look at someone like me who has less than 50 grand in the market, that would be equivalent to me owning $10 worth of Alibaba. And at that point, I could afford that exposure. Problem is, I can't get a share for that.